you kind of know that when you have DXY really trickling down like this, there's nothing to expect than find GBP/USD also like rallying up, right? Ideally, I've not even taken a proper look at the DXY. If I did take a proper look at DXY, I may have just seen that this thing perhaps may just like keep pushing all the way, because if you look at the formation of the DXY, it's not necessarily showing sign of a pullback. It has actually already done what it's supposed to do. If you watch here, I can just like map up this trend line like this, right? And there's a type of scenario that I tell traders, especially when it comes to like the turning point of the market. One of the key secrets to turning point of the market is that it almost always gives you a second chance to confirm the fact that I want to actually turn from this level, right? And the moment you begin to understand some of the words that I just said, then you start to see things differently. But what I just said is that if the market wants to turn, you normally, like I said, do not get it appearing in that V shape, right? So this is some of the key things that I've shared in my mentorship, and most of my students are very much aware of this. If you get a market just hit some level and then abruptly change, you most likely not perhaps have any logical reason to enter, number one, or perhaps not find it suitable to even enter, and you may not be able to repeat that on a second time. What I'm trying to say is that if you look at this setup here, right, this is like the market. This is like the market literally having an abrupt reversal. It dropped, it didn't do anything, and suddenly like it just went up. Next time when you see like a sharp drop like that, can you just buy just because of some reason? I don't know what type of a logical reason will allow you to like enter the market here, right? So it means that what, for the most part, there's no like gameplay around this. If you take a setup like this, you're just taking it because, I don't know, you probably are trading against the trend or overly excited thinking that the fundamental is just going the opposite direction, or the spike is too long and then the market must just retrace, right? We have some people that bank heavy on their sentiment in the market. Banking heavy on your sentiment is that there's no evidence of a technical logic for you to enter the trade, but your innate feeling just tells you that this thing is too far gone, it must reverse, or this thing is too far lower, it must reverse. That's like sentiment. That's like when we are properly making trading analysis based off strict sentiment, right? Anybody that just use their feelings and innate assumptions, then we say that it's like sentiment. And you get a majority of retail traders actually using sentiment to trade those. So you cannot actually take out sentiment from the equation of the demand or supply of the market, right? People use their gut feelings, people use their sixth sense, their what they call it, there's another word for it, intuitions, right? People use their intuitions to make trading decisions on the market and all of that. So what I was just trying to point out with the abrupt reversal or the V shape is that you normally would not have it occur so many times, and when it does, you are hardly never able to get even the most refined entry. You want to see the market into turning point formations. Let's say one that would normally rather give you more like a U shape than a V shape. And then apart from that, you also want to count out for like that type of abrupt reversal, which is like brief one, and then comes back to make an opposing one again, or second confirmation one, right? Then you can now bank on that to assume that what this thing will actually like go back up. And these two scenarios give you like a level head to actually take a lot of time to assess the market, to calculate your risk, to know where to put your stop loss, to have valid confirmations as well. These ones don't normally do those things. It hardly ever gives you that opportunity or ample time to think about the setup. It hardly ever gives you a proper entry confirmation. It hardly ever gives you a logic around where you're going to put your stop loss. It hardly ever gives you like certainty in terms of repeating the same setup. So I've actually mastered this, what I just shared with you. And then so if you see a situation like this, right, you can see that what if we kind of zoom out a little bit, right, we have the XY psychological level around 106.50. It's like the highs that has just been trading, touched here, started trading. Ideally, you can expect that it seems to just go and touch there again, right? Now, so this is where the first cue is. if you see that, okay, I'm expecting the XY to go and touch here like this, right? Because that's where this where the real trick is, right? It's been a while I taught you guys something, so pay attention in class. You've marked up this range that, okay, I'm expecting the XY to go here because what? It went here 1, it went here 2, it went here 3, right? And then you kind of zoom out, you can see that, okay, it played around here, but it just traded all the way above it like that, right? But see, right? I hope you guys are with me. Follow accordingly. Now I'm expecting, okay, the XY to tap into that zone, and I'm watching the market, right? And then I'm watching the scenario like this. Moves up, then it suddenly start dropping. Then there's another drop. Then there's another drop. I'm like, but I was kind of expecting the XY to kind of go and then tap into this range, but it just pulled back and then just dropped a little bit, right? First Q, I'm just going to put like this type of horizontal line above, or you can just put like this brief line above it just to denote like the most recent highs in the market, right? Then what happens, you can have this market trade even lower, right? Sort of approaching the trend line, you're seeing it, right? Then it starts what? Suddenly reverse in the opposite direction, right? Then it's beginning to give you the second reversal formation that I talked about, which is like this one, right? So the moment you start seeing it can be in the opposite direction. And when you start seeing it's like, okay, you don't normally want it to finish occurring before you assume something in the market, right? Because if you finish occurring, then you're going to see it like this. What if it's quite long and then you see it like this and it finishes? Then it means that you're going to cut the market through here, right? And then perhaps this point to this point, maybe let's say 70 pips, 80 pips, 100 pips, then it means that you're going to like want to now take entry into the market from this range, and then ideal place will be your stop loss will be here, and then you would be like very, very little. You'll be probably exposing a lot in the market. So first thing is, the moment you see the market tap into that zone, right, you must have mastered the candlestick patterns already, right? So looking at this, I have already mastered the candlestick patterns. So the moment I start to see these are things I already know that, okay, this market is already rejecting from this region, right? I've seen the first one, second one, right? And then this one, right? This one being the confirmation, right? Ideal situation, even if I want to be very conservative in the market, then I can indeed just wait for this one to close. If I do, so there's so many times where I've taken trades in the market where my mentees will ask me, because I always tell them to like be very conservative. I teach them conservative moves first before we go to like the risk exposure ones, right? Risk exposure means that like we do not actually, we kind of go ahead of ourselves in the market. Going ahead of ourselves, you can like lower this to like the 15 minute, right? If you look at this one, right, it means that with this type of situation like this, our entry would have been just somewhere here, right? If I switch this back to the 4 hour, it will be like this, right? Which means that just off that wick, right, our entry is just there and our stop loss here. But the situation here is that it's not conservatism. It's just like you being a little bit ahead of yourself in the market. You're having a lot more appetite for risk than the norm. I took that similar trade on GBP USD, and I broke it down for them in about last 2 weeks or so. But like I said, ideal situation, you would want to wait if you're a very conservative person. But the more you tap, you kind of see this, then already you're getting the idea that, okay, this is what I remember of what for typical characteristics of the market when it wants to like change direction or revert, right? But remember, this is the XY. So if you're doing this for the XY, you're doing opposite for GU, EU, right? And suddenly what happens? It just continues lower like that, right? This is what we are having this early morning, being Monday, right? And that's also a good reason to account for why we're having GBP USD like doing what it's doing here, right? And then Euro